Hello traders, Cousin Vinny coming to you from theclosingprint.com on October 13th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week. Internationally, only the London Stock Exchange and the FTSE showed a bit of weakness because of the strength in the British pound. Big cap tech stocks had a pretty good week with the exception of Amazon. The bond stock ratio is bullish. HYG and junk are bullish. The Dow Composite did bounce at support and moved higher, and the S&P 1500 is on a buy signal as well and bullish. With institutions not being that active, volume was lower than we'd like to see, and blocks need to pick up as well if you're bullish. NYMO and NAMO are trying to turn. Breadth is improving. The S&P 500 equal weight index is on a bullish signal that triggered on Thursday and followed through on Friday. VIX did drop. That's telling me that we should expect to see a bounce. US dollar has faded as it trades in a minor wave, moving back down below the 50-period moving average on that China-US news at the end of the day on Friday. That was a good sign for the markets. The yen was bearish. That helped lift the Nikkei as well. And we did see bonds pulling back, fading. The 2, 5, and 10-year yields all moving higher. The gold SPY ratio was lower. That's telling you that gold is a little bit weaker now, below its 50-day moving average, and copper is bullish as a leading economic indicator. While crude has been in a sideways range, we did see a bounce on Friday. While the heat map is telling us to be somewhat neutral, as the XLY-XLP ratio is giving us the same signal. International markets are improving, but they're neutral as well. We'll look at some IBD 50 names. Do note that there's quite a few less this week. These stocks all closed in the upper half of its daily range. In addition, we'll look at some MarketSmith relative strength names. Bukowski is showing 4 or 5 green with the CPI signal mixed green since October the 11th at 96.2%. That's bullish, with 3 bearish patterns, 76 bullish patterns, and 419 patterns waiting to break out. This last number that's pretty intriguing. If these stocks start to move higher, that would be a good indication for a follow-through into this week. Starting off with the S&P 500 equal weight index. Important to watch this particular index because no stock is more important than any other. And as we've pointed out repeatedly, whenever CCI gets oversold and triggers, many times we'll see a follow-through. Since the beginning of the year, each of these vertical lines denotes one of these triggers, and we can see what's happened with price action in each case. Not saying it's going to be anything like the previous occasions, but we're in this ascending channel, and I would assume if we can close above the 20-period moving average this week, we should see a follow-through and a test of this pivot high in the short term. Also note that breadth is improving. The number of stocks trading above their 50-period moving average in the middle panel is rising, but not overbought. In addition, the S&P 500 is back above its 50-period moving average, the green dashed line, and breadth is improving. With the advanced decline percent for the S&P 500 in the top panel, mid caps in the middle panel, small caps, and the NASDAQ in the lower panel. You can see these have all moved off of oversold conditions and are improving as the NASDAQ outperformed the other indices last week. We did see buyers step up at the lows each week of the past 2. We're looking for a test of these highs at 79.75 this week, and ultimately a test of this upper trend line of this ascending wedge pattern. Of course, that would mean that the big cap FANG stocks and tech will continue to improve. We especially like the action we saw in Apple to end the week, as the stock broke out to new highs and closed in the upper half of its daily range on above average volume. In addition, we had a MACD cross and RSI is rising. We also want to see The small caps continue to show a little bit more strength. We'd like to see this break out in the next couple of weeks. Small caps are having difficulty getting any traction. The New York Stock Exchange new highs minus new lows ratio did pop substantially on Friday with a 1,757% increase over the previous day, Thursday, closing the week with a spike higher. That's helping to turn the moving averages upward, and NYAD, New York Stock Exchange Advanced Decline, shows breadth is improving. Price actions back above the moving averages and rising rapidly, suggesting a bullish start for the week. In addition, the S&P 1500 is on a buy signal with histogram improving back above the zero line and rising as confirmation. I am a bit concerned about the way the S&P 500 sold off after 3:30 on Friday. We did produce this shooting star pattern. However, the contrasting indication here is VIX is dropping. We closed below the 50-period moving average, and we closed near the lows of the session, which is leading me to believe that fear is dropping, and we could see a trade back into this wick. We just need to see confirmation on Monday. In addition, we have the ARC Institutional Index, which is showing us what major institutions are looking at. These are the 75 stocks that are most commonly held in their core portfolios. Price action moved above the midline of Bollinger Bands. That's the 20-period moving average. Testing these overhead pivots, the 200-day is moving up. This looks pretty bullish to start the week, considering the stocks that are in here. Most of them you're familiar with, and a good indication that big caps are outperforming mid caps and small caps to start the week. And finally, there is the Coppock Curve, which is starting to show a turn in a bullish direction, similar to what we saw back in August, where I told you to look for higher prices. We eventually broke out back above the moving averages. We had a nice bullish thrust to the upside before failing the first week of September. But most of the indices look the same way. As we pointed out back in August with the Wilshire 5000, when we saw this signal starting to turn abruptly like it is now, and like it did back in late May, it led to appreciation in asset prices, and all of the equities started to move higher. So we're looking for the same kind of confirmation and follow-through in the weeks ahead. The bond stock ratio is bullish as the ratio, the red line, continues to drop. So you can see that equities are favored over bonds when this ratio is moving lower. The 2s, the 10s, and the 3-month yields are displayed in this chart. Important that we get back above the blue line and have the yield curve steepen again going into the end of the year, as we're looking for this signal to give us a thumbs up for the equity bulls, while we also watch for high yield corporate debt and junk bonds to move higher. We did see buyers step up the last 2 weeks. That's also a bullish indication for equities. As we watch for bonds to move lower this week, TLT losing the 10-period moving average on the weekly, looking for price action to come back down and test these lows at 138 to 136 like we saw 5 weeks ago. Considering currencies for a moment, the British pound US dollar pair bolted higher last week. That put pressure on the FTSE and the London Stock Exchange. By contrast, the yen moved lower. That helped lift the Nikkei. As you saw in the opening monologue, the Nikkei rose almost 2% last week, while the London Stock Exchange and the FTSE moved lower in response to that strength in the British pound. So it should be no surprise that with the US dollar moving lower, it would be a tailwind for US equities to start off this week. In addition, China and the US came to an agreement about manipulation of currencies. China indicating they would be forthright in pegging their currency to the dollar. So we're looking for this to move lower, which should affect commodities in a positive light. Instead, what we saw with gold is price action moved back down below its moving averages, the 50 period being the green line. If it drops into this zone right in here, that's a reverse Kirby, we could see a quick drop back to the support zone right around 1440. So if you're trading gold, also watch RSI, it's drifting lower, so that's indicating we could see more downside. While copper moved higher in response to the US dollar weakness, if we do see a push to the upside and we break out of this descending wedge that we've been watching over the last several weeks, that would be forecasting better things to come in the US economy. That also goes for crude oil. We'd like to see crude oil start to break out of this sideways range. When it hit its peak in April, it's since been putting in lower highs and a flat bottom here right around $52 per barrel. Crude oil has a positive correlation to U.S. equities, so we'd like to see this moving higher to help give the U.S. equities another tailwind going into the seasonally strongest months of the year. As we talked about in the opening monologue, we'd like to see strength in the sectors begin to improve, with financials, industrials near their 20-period moving averages, technology near a breakout zone, while healthcare and consumer discretionary showed shooting stars back to their 20-period moving averages to end the week. So we need to see the sectors improve. We'll focus on transports as well. We saw a lot of airlines moving higher to end the week. Materials also closed near the 20-period moving average. Finally, there's the XLY-XLP ratio. This needs to turn back up to get bullish. Right now it looks like institutions are hedging like they were back in August. All of the IBD 50 stocks that we'll look at this week for potential trades have a few things in common. We always like to look for a 20 and 50 period moving averages rising with price action above, RSI above 50. In addition, I was looking for stocks that showed relative strength, closing in the upper half of their daily range instead of fading like the S&P 500 did in the last 30 minutes of the trading session. This is just one cautionary comment, as we saw many of them fade markedly towards the end of the day. So I'd prefer to look at stocks like Arch Capital that closed above the 20 period and price action closed in the upper half of its daily range. We can see Comcast with similar price action. Instead of fading like the S&P did, price action held up very well. It didn't close at the high of the day, but it did look pretty strong. That's why we're looking at Comcast this week for a potential trade with RSI rising, price above the 20-day. 20-day is starting to turn, and we see above average volume and MACD turning. Globant also with a similar look to it. Price action is above the 20-day, RSI is above 50, MACD is above its signal line and rising, and price action closed in the upper half of its daily range. Very important, in my humble opinion, as we start the week, as I prefer not to trade stocks like Discover Financial, also an IBD 50 name, but RSI is below 50, price is below the descending 21-day, and we had this ugly price action fading towards the lows of the day, producing a shooting star like we had here. See the difference? Shooting star, and what did we do? We gapped down on Tuesday. So I'm very leery of stocks that did not hold in the upper half of its daily range. In mode in the healthcare sector, INMD also held the 20-day moving average, closed in the upper half of its daily range, RSI is above 50. I'd like to see this get a little bit more momentum. Volume was above average. We're starting to see MACD turning. So we should see a follow-through if strength persists in mode. That'll be something we'll be watching for on Monday and Tuesday. Lulu also showed substantial strength last week, Thursday with a huge expansion day, followed through on Friday, and we held within the upper half of its daily range. RSI is rising. We had above average volume, and MACD is crossing. Rexford Industries. This is a REIT investing in commercial properties in Southern California. Nice trend. Doesn't report earnings until the 29th of October. Above average volume, relative strength line climbing, and the stock closed within the upper half of its daily range with a nice trend, 21-day rising, RSI above 50, above average volume, and MACD crossing. This one's been on the watch list previously. Upland Software, also with similar characteristics, RSI above 50. Nice price action, pushing away from this pivot. Once it gets above this area, it should start to rise quickly. Price stayed in the upper half of its daily range. MACD is above its signal line and rising, and we did see above average volume. All of the characteristics we want to see to start the week. Additional stocks that showed relative strength last week, closing in the upper half of its daily range, was Apple, breaking out to new highs on a gap up, RSI above 50 and rising, substantial volume, MACD above its signal line. Most likely will continue, though I'd like to see a little fade first thing in the morning to give a better opportunity. Wait for buyers to step up after the opening range, the 10:05, 10:10 candle. Right around then, we'll see what the indices have in mind. And if the markets start moving higher, especially the Qs, the NASDAQ, it usually will indicate that Apple and the big cap tech stocks should follow suit. While not my favorite stock, AMD did show a expansion day on Friday. The only thing I don't like about AMD is the descending moving averages, but this could start to gallop higher, especially if we see strength in Intel and Nvidia. Those were looking pretty good this week as well. Though this is another example of a stock that didn't hold in the upper half of its daily range. I would like to see better price action in Intel and retest these highs at 53.50 and break out to point to these highs at 58.50 in the short term. RSI is above 50, volume is above average, and MACD is crossing. Most likely see higher prices with Intel in the weeks to come. Nvidia showing a similar action. Couldn't hold the highs of the day, faded, so that's showing me that there's some weak hands in Nvidia at the present time. One of the reasons why I'd be very careful about trading it. While stocks like CarMax showed above average volume, we pointed that out live during the sessions on Thursday and Friday. Friday had a big expansion day as it broke higher, trying to test these 52-week highs. RSI above 50, did close in the upper half of its daily range on above average volume and a MACD cross. Looking for a breakout in CarMax in the short term. Ulta is a stock that we've been trading over the last few weeks. Still have a position in common, as the stock caught an upgrade at the end of the day on Friday by Wolf Research with a new target at $288 per share. Look for Ulta to follow through. RSI is rising. We'd like to see it get back above 50 with price action moving above the 21-day on above average volume. MACD is above its signal line and rising, showing that the bulls are in control. Vectrus is a stock that showed up on the MarketSmith Growth 250 Relative Strength Blue Dot Scan. Note the stock closed in the upper half of its daily range, breaking above these pivots. MACD is above its signal line, and we see above average volume with RSI rising. With the company providing infrastructure, asset management, information technology, and network communications services. Note relative strength line is at 97 and climbing. Looking for a test of this pivot breakout zone. Flat base breakout with earnings scheduled for November the 11th. Company has decent sales and earnings and some decent metrics that could improve in the short term. Zynex also showed up on the relative strength scan. We've seen above average volume. Annual sales and earnings are increasing. IBD metrics could be better. Price action looks like it's ready to break higher. The company develops electrotherapy for pain management and rehabilitation devices for stroke and spinal cord injuries, with the stock closing in the upper half of its daily range. Volume has been pretty obvious as the stock continues its bullish price action. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for October the 13th, 2019. I'll send out a watch list later tonight around 11:30 on the East Coast and 8:30 on the West Coast. I hope this helps. Take care, and we'll talk to you soon.